Interest rates are rising. We're getting a lot of calls and emails for good reason. We've seen 1.25% increase in prime in the last 3 months. Probably going to see another 50 basis points in July. What I can tell you is this: the Bank of Canada is pretty clear that they're trying to front load the interest rate hikes, get the overnight lending rate to a more neutral level, maybe slightly above. And then from there, they'll likely go on hold and see if the economy can withstand the hikes that they were doing. The reason for that is inflation. At the beginning of this year, our projections in the office were 3.25% interest rate hikes for all of 2022, which would have been a lot more than in many past years combined. But what happened was the war in Ukraine. At the end of February, that war kind of broke out. No one was expecting it. Has driven inflation numbers across the globe. Australia Central Bank just hiked 50 basis points yesterday. So there's a lot of things that are happening. And what we can do is watch the front loading take place, determine with you whether a fixed or variable makes sense. And I can tell you this, I'd say it's about 50 to 55% variable right now that people are taking, but there's a 45 to 50% of our clients that are actually going fixed. I tell each of them the same thing. I say, I'm going to give you my financial advice based on where I see the inflation numbers and where projections are headed. But at the end of the day, if you cannot sleep or every single week you want to check interest rates, then make a personal decision. And even if it's losing 25 or 50 basis points on your interest over the course of 5 years, it might make sense just to go fixed and not think about the interest rates until 2027. That's kind of what we're telling people these days. Also, just want to touch on home prices. I've said in the past on videos, in emails, and even on CP24, a few other outlets, I'm a long-term bull, but we do expect a slight correction here. Prices got a little bit away from themselves. Interest rates are rising. We're just in a situation where the stock market and the real estate market is probably going to see a slight correction. But don't fret over that. Put yourself in a good position. Have the plan already set. Get a little bit more cash on the side, and then be ready for whatever comes your way. Maybe you own one property and you own a Toronto house and it's worth $2 million and you've got a $800,000 mortgage, and you've always wanted to buy a rental or two, and you think that's in your plan for retirement. What I can tell you is this: if the market corrects 20 or 30%, be ready. Set yourself up now so that January 1st of 2023, the market comes down 20%. That rental property has been sitting there that you think is now devalued, and you're in a position to actually act and put that one in your portfolio. Same with trading up. Maybe you're in a townhouse that's 1.5 million in Toronto and you're like, you know what, we wanted to go to the detached 4-bedroom in Leaside or Rosedale, but it's gotten away from us over the last couple of years. Maybe that $3.8 million property is now dipping down to 3.2. You can sell the townhouse, take the gains that you've already had, and upsize your family into that actual dream home that you've been looking for. So just remember this: the fear that's out there can be a really good thing if you don't let it get to you, and you put a plan in place, try to keep your emotions out of it, and just put a concrete financial plan in place, and then be ready to act whatever the market brings. Now, if the market doesn't correct, which I think a lot of us would also be happy about, then you're in a great position. You have a little bit more cash on the side, you were ready to act, but guess what? The values didn't come down enough for you to actually act, and that's okay because your current property is withstanding its value. So it's just how you look at it and just plan accordingly.